afternoon, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition. Sorry for a little yesterday's break from the action. Of course, I had to go to a vet and do that type of stuff. Went okay, just very expensive. Specialists in the dog world, as you guys know, can be pretty dang pricey. Anyway, good to be back. We got a lot to talk about because a lot of you have sent in questions, and I'm going to try to get through a bunch of those today. The main one, I received multiple from you, was basically this guy right here, which is Nasdaq into the unknown. The question was, what do I see, the markets go, where do I see markets going from here? And again, you all know my opinion doesn't matter, but Bryce's question is interesting. He says, how do you identify supply zones on something like the Nasdaq or the S&P? Well, I'll tell you, it's difficult. There is nothing historical to go off of. So when you have a market like today, Nasdaq up to all-time highs again, S&P as well. So, what sort of things do we look for that? So I'll walk you through a couple of things that I do, although I'll be brutally honest here. When I'm looking at a market like this, I'm not looking for supply zones. When you're at all-time highs, when you're in uncharted territories, which is kind of what the graphic was intended to convey, was kind of this boat sailing off in the sunset and nothing in the way, there's nothing to stop it until something does. And trying to predict when that something comes along is, to me, a fool's errand. So I'll zoom out here on this daily time frame of the S&P. We'll go out to, let's do it weekly first, just so we can see the big picture. S&P's popped down. So there's your weekly time frame of the S&P. Obviously, I have nothing on the left-hand side of that chart to look at. So the question now becomes, what sort of things am I looking for to forecast or project where this one may go? Well, this all depends on the type of trader that you are. If you're a Bob Dunn type, you're riding that wave. And right now, there's no argument this wave is clearly to the upside, and it doesn't feel like it's going to stop anytime soon because the momentum looks very similar to what we saw back here in late 2023. The momentum looks like it's still moving. So typically what I would do is I like to use trend-based extensions. And this is just a simple tool. I think that each one of us is going to use it slightly differently, but I will show you how I use it. Typically with this type of tool, you're going to take the last move, which was this nice move from the lows in October of 2023 to the highs we saw here in April, and then you pull back to the most recent retracement, which would bring us down to this low from April 15th. And then what that does is it creates these sort of target lines on your chart here, which we can use to kind of forecast where price may go. So you can see if we did a 61.8% extension off of that fib retracement, then that should put us right around 5,700 on the S&P. If you're looking for a one-to-one, I know a lot of people like to look for a full 1%, a one-to-one move, then you're looking at 61.74 on that. Now, will we get to 61.74? The answer is yes, we will get to it, but I just don't know when. Will it be part of this rally? I don't think so. I just don't think there's that much momentum, but I don't see anything to really stop this from continuing to slowly go up. Again, that 61.74 mark on this S&P, that's obviously fairly lofty. That's rather, let's see, what percentage is that from current levels? That would be roughly a 8.59% move. That's called the month of June. I mean, we saw 5% months here, so that could easily happen in the next couple months. So not unreachable. Just you got to ask yourself, what's going to be the fuel for that rally to keep on going up here? So Daryl says, shot glass. You may get one. All right, you may get one. So, there were a lot of people that had very high forecasts in our challenge for this year, and you may be rewarded with that one. It looks like my number will be off, although we still have a long way to go. We're just a little over halfway through the year. We've got until this vertical, I'm assuming that's a green line on the 30th of December, last day of the trading year, which should be the 30th of December. So we have until that point to let this market do whatever it's going to do. Now, what was it that was really fueling all this? I just think it was more just tech love. Right, you had a lot of love in the tech space today. I'll go here to our hot list so you can kind of see what some of the bigger names were. Obviously, Nvidia, 2.69%. I'll bring up a daily here so we can check out that bad boy. There's your daily. Nvidia now coming right back up into its previous high. So it hit an all-time high on June 20th. We sold off a little bit. I thought we'd go a little bit further down, getting to about 20% retracement. We didn't. All in all, that retracement was decent, but not 20%. And here we are now just building, pressuring, moving higher and higher and higher as, again, more people are in love with Nvidia, and rightfully so. We did see a little bit of a stall, at least today, with Tesla, which has been one that's been vaulting these markets over the past week or so. Oh, just drives me nuts. Every time, this is the regret trade, my selling my calls at 165 on Tesla because I didn't think we'd rally this fast, and it's just come back to bite me, that's for sure. Morning, Gio. Or afternoon, I guess. A bearish reversal pattern to go bearish. Well, in the grand scheme of things, you're not wrong with that thought track market. You're waiting for a reverse, some sort of reversal pattern to set up. And again, if we're looking at the S&P, and I'll look at the S&P and the Nasdaq because the topic for the show today was the Nasdaq. So let's just go triple Qs. And I can look at the futures if you want, but either way, paints the same picture. And you can see if we do that same sort of fib trend extension numbers here, we'll go from those lows that we saw back on. I can do it from multiple places, but let's do the bigger picture first. We'll go from those lows on October like we did on our weekly time frame just to show how that would work. And I'll go from those lows back October 23rd to the peak we had on March 21st to the retracement here. And again, now that's going to start to give us some extension levels here, which may give you a clue as to where this Nasdaq 100 may be headed. If we're looking at the Nasdaq 100 ETF triple Qs, we're currently sitting at 502.96, and it looks like 520 is your one-to-one extension. That is actually very close. We're pretty darn close to that one. Oh man, Big Ab. Yeah, I'm glad you got your Nvidia still. If it makes you feel any better, I sold out of mine at 165, so pretty upset about that one, but whatever. There's always something else, right? I can't let that one get to me. I'll have to just make that next trade and then worry about the next one. So this one's actually very close to getting to your one-to-one mark. Now, to the initial question, which was from Bryce, asking about how do you identify these supplier demand zones, you don't identify a supplier demand zone when it's in blue sky or uncharted territory. There is nothing to identify. We could be using fib extensions like this, but again, this is very subjective. To me, it's artwork, right? How do I know that the vast majority of people are drawing them in the same places that I'm drawing them? I don't know if they're drawing them in the same point. So it really becomes more of an art form because someone may be using this point as the high or this point as the low, and then we don't get that confluence of all of the traders kind of collectively seeing the same picture. So in this picture here, I think 520 would be a pretty logical target for this Nasdaq to run to. And that said, if I look at it running to this 520, that's only a 3% move from current levels. So that's really like nothing. That's a couple of days. Heck, could get there by Friday the way things have been moving. That said, Bryce, when we look at this 520 mark, I am not going to go out there and put a sell short order ahead of time expecting it to turn. Could you do that? Absolutely, right? You could go out there and say, all right, I'm going to base this supply zone that doesn't exist yet off of something theoretical using Fibonacci. To me, that's a pure gamble. I'm more with Margaret. Margaret said, a bearish reversal pattern to go bearish. That's where I would be looking for if I wanted to take a chance at that. And, we saw one on consumer discretionary a couple days ago on XLY, and I'll show you what that looks like. XLY. If I saw this pattern that showed up 2 days ago on Monday on XLY, if I saw this on the Nasdaq tomorrow, the next day, whenever, I may take a shot at it. But again, I have to follow those same rules that I've been telling you about, which is if I have this shooting star right here, all right, let me just zoom in on it. It's this guy right here. I'll put a yellow box around that one just so you guys can see. Let's go yellow box just to highlight it. And all right, so the one inside that yellow box is your shooting star. What I'm going to anticipate, if we do see this type of pattern, it'll put on the hard red edge so it looks just like that. My rules are very simple. I'm putting this dotted red line on the low of that candle. And if it opens up above that and then starts to fall, that's the short opportunity. I told you on XLY, I bought directional puts before it broke, which is against my rules, but I was just bored and I wanted to play it. So I have one contract. Don't really care. It's not going to hurt me at all. I got one contract on that one. And if it had opened up above here and started to break down below, I would have added a bunch more to that position. But I never got confirmation. And this thing's been ripping ever since. So if I have that similar picture on the Nasdaq at some point here over the next few days, particularly a shooting star with high volume or a hesitation sideways move that breaks down, I just need the market to tell me that this thing's getting weaker. That said, if I did see a shooting star on something like the Nasdaq, which would clue me into a potential retracement here, I'm not expecting it to be the break of this trend and all of a sudden it's over, right? It's not like, this thing's going to just come crashing down and that's the end. I don't expect that to happen to the Nasdaq here at all. I expect the Nasdaq to have a small little pullback. And if we were to pull back from current levels, honestly, that pullback may just come down to like 496, like just a tiny little, just a pause. I don't see a big pullback happening until something changes with our macroeconomic picture, our political picture. Again, I am of the opinion that we're going to see a shakeup in the political election situation here over the next couple months, and that could cause some volatility and downside movements here for the markets. But I won't hang my hat on that one until it actually happens. Yes, market on the XLY, it was deep out of the money puts. I don't remember the strike off the top of my head, but yes, but it was just one. Like I say, if I have conviction about something and I feel strongly about it, I'll buy. I would have bought a bunch of directional puts. It was one of those ones like, it looks like it's starting to weaken. I expect there to be a little bit of a retracement in the market. Didn't happen. It just kept on ripping to the upside. That's fine. Lisa J says, and I have different rules for shooting stars and Merlin, so one has to create all their own rules based on their own research. Absolutely, Lisa. Yeah, thank you for saying that, because I don't want people to think that my way is the absolute way. My way is the result of my trading experience over the years. It fits my personality. It fits what works for me, and I found that it works more often than not for me. So I'm okay with that, but everybody's going to have different ways that you interact, react, stress out about these markets, and you have to tailor these things to fit your personal way. So just because I'm showing you my rules does not mean that those are the way that you have to trade them. You'll learn over the years that you have to tailor things to fit you. It's kind of like buying an off the shelf suit at Nordstrom's. If I buy an off the shelf suit at Nordstrom's and put it on, it's not going to fit me right. It's going to be too long in the sleeves, too tight in the waist, whatever. I have to have that thing custom tailored a little bit to make it fit perfectly. I think trading is no different. So thanks, Lisa, for adding that in there. I definitely agree with you there. So Bryce, that's how I'm looking at it. I don't think that you should be trying to pick the top of this market. You look at what's going on presently. I think right now you're watching the short interest. Let me see real quick if I can bring this up here. Hold on, Nasdaq Trader. You can pull up the Nasdaq Trader short interest, and it'll give you like a list of what is short right now. Let me see if I can find this one for you guys. Sorry, looking through here real quick. All right, so what I'm going to bring up is just short interest on the Nasdaq 100. Now I want you guys to see the trend. So here's the Nasdaq 100, and we'll search for, how many shares of the Nasdaq are short. Well, let's start back here hopefully you can see that one. I know it's kind of hard to see. But if you go to July 14th of last year, 2023, there were 73 million shares of the triple Q short. And it kind of oscillated between 73 million and let's say 65 million. All right, just bouncing back and forth all the way through the end of last year. And then all of a sudden it started to drop. And you notice now we've gone from 75 or 74 million. Our most recent reading on June 28th was only 44.9 million, which means that more and more people are getting squeezed out of their short positions. And I don't think that should come as any surprise. Let's look at where the market's gone since July. It peaked out in July of last year. So we'll go to July of last year just to see how much damage those poor people are feeling right now. All right, so bring my cursor up here. We'll go back to July of last year, and that was right around here. To present market value, the market has increased to the tune of 34%. So what you have is 34% increase on 73 million shares. Some people are getting squeezed. Some people are getting absolutely crushed. That's a nice way to put it. They're getting crushed. Other people might rephrase it like they're getting their teeth kicked in, which is a bit more graphic. But honestly, if you're short that much and the market's moved up 30% against you and they're probably using leverage, they're getting annihilated. So it's definitely getting better with regards to the short interest. And remember, you guys tell me, when the short interest gets very low on something, it's a sign that people feel that this thing's going to continue on and continue on and continue on to the upside. But if something has extremely low short interest and it stays there for a while, my belief system is that it has nowhere to go but the opposite direction. Because what will happen is people will start to short that. Because if no one's shorting it, that means everyone's buying it and you get this big move to the upside, a big push. Look at the companies that are moving up ballistically right now. Apple, Microsoft, Nvidia, Amazon. Those all probably have short interest. I'm going to guess 2% or less, right? Those are very, very thinly shorted ones. Whereas something like, MicroStrategy is probably going to be up in the 20% range. It's in a different league. When everyone's, I can be a contrarian. I am definitely, when you see everything, the pendulum swing to one side dramatically, then I'm expecting it to go the opposite direction. We're getting close. We're at that point now where if we talk about the pendulum swinging one direction or the other, well, which way do you think this pendulum is swinging? It's been flying one direction. Now, of course, this is manipulated, right? We know this is done largely because of the Fed's actions, flooding the economy with money. Therefore, there's more consumption, and that drives up businesses' earnings. Should be no surprise. Plus, now you layer on the AI revolution and this potential upgrade to our entire digital systems with cryptocurrency and digital assets. There's definitely more room for upside potential. But as I see this get smaller and smaller, let's say this short interest gets down into the 30s. I mean, that's a number you haven't seen in forever. It's been a long time since we have a significantly high short interest on the Nasdaq. A significantly low short interest. So as it keeps dropping and dropping, that's more positivity for the Nasdaq. That's more people buying in. At some point, that will turn. So as this gets lower and lower, it does increase my belief system that we're going to see a turn in the markets and go back to our normal move. So in this case, Margaret, I'm definitely contrarian, but as you know darn well, I'm not throwing my hat in that ring to go short. I'm not jumping on Bryce's idea of, hey, supply zone's coming up here, we better go short. Absolutely not. If anything, you're looking for a pullback in this marketplace to buy into this rally and keep on moving to the upside. So Bryce, that was a long-winded answer to your question of how do we, spot these zones. So there we go. All right, let's go to another question here. This is from John. John asked this on Monday, but I didn't get a chance to get to it. It said, can you comment on BA stock? Where do you think it's headed? So I don't know all the final details of their settlement with the government and the Justice Department, et cetera, on their lawsuit. But I didn't look at them today. Let's look at Boeing here. Look, Boeing did some shady stuff, and if what they say is true, that then the settlement will include an admission of guilt and say that they tried to cover up things. So there will be some penalty. I think it was to the tune of like $400 or $500 million. Now, let me ask you this. If Boeing willingly and knowingly released an airplane that had some serious faults that they knew about that could potentially cause this thing to crash, and it killed almost 400 people, do you think that a $500 million fine for Boeing is justified when it's killed over 400 people? Right, that plane went down, I think it was 387 people died in that crash, and Boeing's now going to have to pay a fine of $500 million. It should be in the billions. That means that each person's life on that airplane is only worth about $1 million. No way. Absolutely not. I don't think that that's a big enough fine. It'd be getting off easy for Boeing. And here's the deal. If Boeing takes this to court and continues to fight it and they're found guilty, then they could potentially lose government contracts. So by settling and saying, well, we're guilty of some things, but not the whole burrito here, Boeing skirts this loss of government contracts, which would cost them tens of billions of dollars a year. So all in all, if the settlement goes through as I read it to be penned, I think it's very bullish for Boeing. They're getting off with literally a little slap on the wrist for something that it seems like they were pretty cognizant of. I mean, they knew what was going on, and they'll say, oh, I didn't know it was this guy or that guy, and point the finger. They knew what was going on, and they released that plane. Two of them crashed, killing 300 and something people. I don't know. I think $500 million is way too low of a fine. But RG says Boeing execs need to be held accountable. I agree. That's one thing that really, as you guys know, I'm jaded about the financial markets. I believe that it's full of liars, cheats, and thieves, and most people trying to steal your money. But when you look at corporate structures, you have these businesses like an Enron or a WorldCom where typically you can defraud the investor. You can do shenanigans on your balance sheets and lie, cheat, and steal. The CEOs and executive teams get paid hundreds of millions of dollars, and then it all falls apart, and the average investors like you or me are left holding the bag, and we go broke, yet those people never go to jail. If there was a system that would switch this around just a little bit, and all of a sudden the Boeing CEO had to go to prison for this, it would be a shot to every business out there that, look, you can't do this type of garbage. And I really wish that it would get fixed because, yeah, there does need to be some accountability here. There is absolutely no way that your executive suite didn't know about some of this stuff. It's just, they can't be that ignorant, right? Anyway, Yep, jail time necessary. Throw, you could throw a lot of these bank CEOs in as well for what happened in 2007, 6, 7, and 8, 9, that whole era. Some of the fraudulent people for the dot-com companies. Some of the fraudulent people in these crypto industries. They're at least getting sent to prison. You have not Justin Sun, but you have, I can't even remember the names right now. You've got Sam Bankman-Fried, Do Kwon, hopefully Mashinsky in September once he gets some of his trial. Those guys should all be in prison, but they're scapegoats. These are little fish on the grand scheme of things. They're not busting, your Jamie Dimons and your Larry Finks of the major institutions, but I guess, you don't bite the hand that feeds you, if you will. Tom says, I could take a bullish position by selling a bull put spread. Both sides of that spread appear as short interest. Maybe no one is getting hurt by the irrational exuberance of the markets. Maybe. Could be. Although I think that the vast majority of people, Tom, are not doing, double-sided or doing bull put spreads and then taking, they're not taking those complex type of trades. Most people are going to be directional. Yes, there is institutional money moving that, but to the question from John, where do I think it's headed? I think it's headed up. I'm bummed. I told you guys I was trying to sell some puts here at 140. That was actually back in April. I was really hoping to get down to that 140 level. I still have it mapped out, but I don't think we're going to get there. It feels to me like Boeing has turned the corner, and if they actually do sign this document, which they've signed it, but it has to be approved by the courts, I believe, I think that the day they sign that, you'll see it drop just a little bit, and that could create a good buying opportunity. I personally would be looking to be buying Boeing on the day of that settlement if it drops. I want to see it sell off a little bit here as people are like, oh no, they're paying this, several $100 million fine. But the reality is they're back to normal. They get all those government contracts don't go away, and then I think you start to see Boeing creep back up here. So I would be bullish Boeing long term. I talked about this in a while back. I think that Boeing is one of those too big to fail companies for the United States. Yes, we do have airplane makers, smaller ones, but we only have one just gigantic airline company airline manufacturer here in the U.S. It's Boeing. To me, they are a critical part of our infrastructure, and if we weren't going to be buying these planes from Boeing, we'd be buying them from Airbus, which already is backlogged with all the European orders, and they're a European company. So I think Boeing is probably going to be okay long haul. All right, I'll leave that one home. I heard that Nvidia has a stake in NNOX. Do you know anything about this? I don't. From my, God, I hate to even say it, but my insider at Nvidia, who does give me some pretty good insights into what Nvidia is doing. You go back a year ago, and all this guy would tell me, he looked me straight in the eyes like, just buy Nvidia. He's like, we are going to do the most amazing things, just buy it. And I did not buy Nvidia. So shame on me for not listening to people. But the inside scoop is Nvidia has hundreds of millions of dollars invested in other companies. It's not like they're just invested in this one or this one. They are invested in a lot of different companies that are all going to be benefiting from Nvidia's technology. So Nvidia, you talk about insider trading. Think about this. You're the company that sells, how can I give up with a basic example for this? You're the guy who's selling picks and shovels, right? And it's the gold rush. You're the one who sells all the picks, all the shovels, all the mining equipment. And your clients are different miners. So you got this one guy out in Northern California. He's in Cleveland, Ohio, and he's mining, and you're like, oh, I'll raise the price of stuff I'm selling him. I'm not going to invest in that mine because I've looked at it. He's not doing anything. He's not pulling any money out of the ground. It's Cleveland. There's no mines in Cleveland. Coal mines, maybe. Then he looks over, and he says, boy, there's a guy in California, and I checked out that mine, and man, they are pulling gold out by the truckload there. I'm going to invest in that mine. That's almost like Nvidia. Nvidia knows by selling these chips to certain companies how good their product and services are. So Nvidia will be selling them the chips going, oh, we like your business. What are you going to use this for? And you know what? We're going to buy you or invest in your company. So Nvidia not only has their own products and services, but they could potentially reap huge gains from these companies that it's invested in, their investments. And if some of those companies come to market and go public, Nvidia's stock could go significantly higher. It's one of those ones I think a lot of people don't pay attention to is, what is a company buying into? If you look at Microsoft, Microsoft has been forever acquiring different companies that are using Microsoft products or building something that's complementary to Microsoft. In this case, Nvidia is investing or buying companies outright that are using their software and their hardware. Great. Pretty impressive. So there you go. Let's see, what do you got here? You could have been retired by now. Nah, I don't know if I want to. Right, Steve. That's why I meant the point earlier. Airbus is the only other major. There are a bunch of smaller airplane manufacturers, but Boeing is not just commercial airlines. There are also defense stocks, and space. So I definitely think that Boeing is way too big to even think about failing. I think that they got a crony capitalism handshake by the government, said, hey, you screwed up, okay? Listen. I'm looking in the eye, Boeing. You guys messed up. You can't do this again. We're letting you off light, but we got to find you something or we'll look soft. So how about a couple $100 million? And Boeing's like, okay, and we'll admit guilt, It goes back to my old, it's not a joke, it's just a nice example or metaphor, if you will, of the financial markets, which is I can walk into a 7-Eleven, and if I steal a candy bar, I could get arrested. I could get, well, not in San Francisco, but let's say it's down here in Southern California where they enforce the laws. If I steal that candy bar, I could go to jail, I could get fined, I could get cited for that, right? And that would be terrible. However, the way that this Boeing example works is much like these big institutions in the financial markets. They get caught doing something atrocious, horribly bad, ripping off customers, in this case, approving things that should not have been approved, killing people in the process. With the financial firms, it's just taking too much money from people, or like Wells Fargo, creating fake bank accounts for people that don't want to have a bank account and charging them all these fees. It's like, Wells Fargo, what are you doing? They get a little slap on the wrist for that, but the amount of money they made off of doing those illegal things is far exceeds whatever fine they get. So where's the deterrent there, right? If my fine for stealing, let's say the Snickers bar is $2 and I steal that, cops show up and they're like, hey, you can either go to jail or you can pay a fine right now. And say, okay, well, what's the fine? They go, 10 cents. I'm like, well, so I have to pay a fine of 10 and I'm off. Scot-free? There's nothing nope, you're good. We won't even have a record. Okay. I'll pay 10 cents and I'm going to come back and steal that candy bar again tomorrow because I basically got it for $1.90 cheaper than I would have paid retail prices for. I know, Steve, banks do this all the time. It drives me nuts. I don't want to be a politician because I just hate it. I think the politicians just don't believe in helping the people. I really believe they're just helping themselves under the umbrella of, we're helping the people. I don't think so. I think most of them are there to help themselves. When they say they're going to do something, it's for their own interest in their portfolio. I would love to be a politician because for me, it's just not about the money. It'd be about making a change. But there's just too many corrupt people on Capitol Hill to make that change on both sides of the aisle. Again, I always try to keep that, straddle that fence here because it's not, I know some of you are going to go, well, the Democrats are illegal scumbags. Well, the Republicans are too. There's documents for both. So it's an overall political thing. All right, Tom says, Nvidia makes no chips or picks or shovels. I wouldn't want with that in any SWOT analysis. Well, they don't make picks or shovels, okay? It was an analogy. I was just saying that if you were someone, they do sell a complex chip that they compile. They don't make the chips, but they're taking components and making another chip that they sell out. That's what they're selling. And they're selling services to support all that as well. So if I know my customers are buying those services and I can see what my customer's business is and go, wow, there's huge potential here, that gives them a competitive advantage, which is why I think Nvidia is probably headed for higher highs. All right, John, that was the Boeing stock where I think it's headed. What else did I have in here? How much time I got? All right, plenty of time. We're rolling. Next question is from, I hope I pronounced your name right. I apologize. This was from an email you sent in to TraderMerlin at Gmail. Zedagon? I think Zedagon is the name. He says, considering the short interest on Microstrategy, you think it will give us a better return than Bitcoin between now and Q3 of 2025? Very interesting thought. All right, so I know a lot of you are bullish on MicroStrategy, specifically for the short interest. And the belief system is if we see Bitcoin prices surge, then MicroStrategy's price is going to surge. But because there's so much short interest on MicroStrategy, some of those people who are short MSTR may be forced to buy their shares back, which could add more driving pressure to the upside. We talked about this a while back. I can't remember who it was. It might have been Scott McCormick, but kind of how MicroStrategy is a leveraged Bitcoin ETF almost. I know it's not. It's a software technology company, but with that much short interest, it could be. So let's look at, let's do two things here. How do I do this one? Let me go to barchart.com. Oh no, it's stock charts. All right, so we'll go to stockcharts.com just to kind of create this point here. And we're going to go MSTR. And I will put that over with BITO. Now, I know this doesn't have the longest track history, but this is just their ETF there. And just to see how these two perform, in red is MicroStrategy, in blue is Bitcoin, right? That's the Bitcoin ETF, futures ETF. And this only goes back, well, let's see how far back I can go. I think it goes to inception of these ones. All right. Well, I think this pretty much answers your question, doesn't it, Zetagon? It looks like MicroStrategy is giving much higher performance than Bitcoin itself. So going back into when Bitcoin's really falling back in 2021, from that point, I'll give you a starting anchor point here. From October 18th of 2021, Bitcoin, or the BITO ETF, is down 18.73%. Yet MicroStrategy is up 76%. Now let's go from where these markets bottomed out. We'll go from 2023. And I'm going to go from January 2023. Should be right about there. Yep. So January 2023, Bitcoin is up 206%. MicroStrategy up 800. So yes, I do think that MicroStrategy would be if you really felt strongly that we're going to see this next year very positive and bullish for Bitcoin, then I think MicroStrategy is probably going to be a better rate of return to the upside. I think that just history, the chart there has shown it, but also when you look at the leverage side of it, meaning the short interest, I believe, let's check MicroStrategy's short interest here. Hold on. MicroStrategy's short interest is probably about 20 or 25%. Let's go MSTR. And we'll go over here, click on statistics. Now this is delayed. I'm not sure if this is 100% real time. Let's scroll down here and, all right, short percent of float, 22.8, wow, damn good guess. 22.83% short interest on MicroStrategy right now. That's relatively high. You know, for most of the major companies like your Apple's, Microsoft, they're usually going to run around 5 or 6, although last time I checked, which is about a month and a half ago, 2 months ago, they were down around 1 or 2%. Let's check Apple here just to see. Obviously, shorting these guys right now like Apple and Microsoft and Nvidia. All right, so you have 1% short interest for Apple. That is very low. Now, Nvidia, boy, I tell you, if you're short Nvidia, you're getting your clock clean. Let's just check and see what their short interest is. They are currently 1.3%. So not a lot of people short Nvidia, and rightfully so. I mean, why would you want to get in front of this freight train of price action that's going to keep on going here? Michael says, would you buy Nvidia at these levels? First off, I can't give investment advice. I'm not a financial advisor, so I can't do that type of stuff. But knowing my style, I would not buy Nvidia right now. I'd be selling puts. And I'd say I'd be selling puts probably at the 120 level, which is pretty close to where we're at. And you can probably get some good premium for that. You get down to this 120, it's kind of near these kind of lows we saw earlier this year, earlier last month, late last month, June 24th. And we also bottomed out a second time around July 1st. So that's, 120, maybe you can get the 115s to go a little bit lower outside of that. But I'd be selling puts to try to collect some premium along the way. And if I get it, I get it. But long term, I'm definitely bullish. The reason I'm skeptical and not wanting to buy outright is I'm just nervous on these markets. I think that they're so overdone. I think they're so extended, particularly technology, that we're going to get one of those big pullbacks. So I'd rather sell puts, buy things lower. If I get executed and the markets fall apart, fine. But I'd rather buy Nvidia at $120 per share and actually collect premium on that and maybe get it for 118 or 117, depending on how much premium I collected, as opposed to buying at 135 and have this thing rail against me. So I would be much more interested in selling puts on that one and collecting premium along the way. All right, and I think I had one more question here. I'll read your questions here. Let's see. You could retire or take us all on that cruise that was spoken about. That was for the lotto winning, Lisa. I need to play the lotto again. I would gladly. If I won the lotto, I'd be so happy to take you on a cruise. It would be fun. I love cruises. I don't know why. I just love cruises, especially on a big boat. I know some people like the small ones. That boat that I was on, the, what was it called? The Quantum of the Seas. It held over 4,000 passengers, and there was literally like a promenade that looked like a really fancy mall with bars and restaurants and shops. I felt like I was in a mall, not on a boat. And then, you got movie theaters and concert halls and discos, and it's just so much fun. You have everything all in one spot. Let's see. Smart Merlin, a picture's worth 1,000 words. Michael, just don't know if you have another choice if you want to own it. Yeah, true, Steve. Well, you could sell the puts at the money, right? You could sell them at the money and collect a bunch of premium. But again, it really depends on what your thoughts and objectives are for Nvidia going forward. All right, last one. It's kind of an obscure question, but VB, I apologize. It's taking me a while to get to this one. I get so caught up in other things I'm doing here. So a while back, I had talked about if you buy crypto, Bitcoin, Litecoin, Ethereum, whatever, and you buy it on Coinbase or Kraken or BitMEX, whatever exchange you're using, to help the system out, you should take that cryptocurrency and move it off to cold storage. Get it off of the exchanges, because if you keep it on the exchange, not only does the exchange have your private keys, meaning it's their crypto, but you're also contributing to the liquidity on that exchange, meaning you're making it more liquid, more people can trade there, but your shares or tokens or coins are part of their liquidity. If I now remove it from those exchanges, it's now off that and no longer part of that liquidity. I'm essentially removing supply from circulation by keeping it on my cold storage wallet. So this is the question that came in from VB Met a while back. He says, you talked about moving crypto to cold storage and out of circulation. In the early 1990s, when a friend had a baby, I'd gift the child one share of Disney and get the certificate printed and framed. I remember calling the broker to do it, but didn't recall what info I had to give. Was that just kept at the broker or a custodial account and the shares dividends split over time, or was that removed from circulation? Great question. From my understanding, that would be removed from circulation because that certificate is your ownership. That is what proves that you own that stock. So you are, in essence, removing. Now, you can't do that today. I don't think you can ask and request to get printed shares anymore. They're kind of a collector's item. I have a few of them in my office downstairs just because I think they're a cool piece of history. But I think it's relatively similar to the discussion of taking crypto off the exchange. Now, there's so many shares available that it probably doesn't make too big of a difference. I think I have a lot more crypto than I do shares and I'm holding long term. So on paper, I think it's roughly the same thing where you're removing it from supply. That was the good old times. Hopefully your friend's child in the 90s still has Disney. Well, let's see. Where do they live? That artwork might be worth a lot of money if you said you had them printed and framed. Oh, maybe not. In the 90s, let's go back to a monthly time frame here. Let's go long term here. I'll go 1 month. If you're back in the 90s, then you were looking at, a split adjusted price of somewhere between $8 and maybe $20. And they're at 99, so yeah, nice rate of return. Would have been better if they got out at $200, but yeah, I have a couple of those. You guys can go on Amazon and type in, old stock certificates. I have them just because I think they're cool. And I have a couple mining companies. They're fun. Lee says, 4,000 passengers. Wow, too crowded for me. I will be on a cruise in Greece at the end of August, which is a smaller boat, like a quarter of the passengers. You know what? It's funny. While you say 4,000 people was so crowded, remember this boat was like 200 feet wide and over, I think it was 1,140 maybe 1,100 or 1,400 feet long. It's massive, and it's 17 stories. So you don't really see a lot of people. Things weren't crowded. Restaurants weren't crowded. It felt fine. I've thought the same thing, like, man, that's a lot of people. Marcus says, can he get his dividends still? So the question there is, how does he get those dividends? My assumption would be that the certificate is still registered with the broker. So you have the physical ownership of it, but they have a record that you own it, and therefore the dividends would be paid to your account. Unless, and I don't know because I haven't done this, unless maybe when you transferred that certificate to yourself, you gave the address of where you want the dividend payment sent to, but I don't know. That's above my pay grade. Lisa says, that's a boat, that's a state. It certainly felt like it. I think I told you, we went to Skagway, Alaska, and Skagway is an old mining town with 1,000, like 1,200 or 1,400 people. And when we pulled up, there were 3 other cruise ships. Ours was the biggest by far. So let's just say you had 4 cruise ships with 3,000 people each. That's 12,000 people in a town that holds 1,100 people. So that was the worst part. Like, the worst part was actually being in that town that day. It was awful, horrible. Thank goodness we got way out of that one and disappeared. Okay. Let's see. I saw a question come through chat earlier about the CPI number. 1 second. Let me go back here because there was a lot that came through. GS, is there something in particular you're looking for tomorrow's CPI and the bank's earnings this Friday? I'm not looking for anything in particular. Really, for me, it's just about knowing when the announcements come out. I can pontificate about why I think a specific number is going to happen or a specific number is going to be released. It doesn't make any difference because they can surprise you positively or negatively with the number, and then comments about these things afterwards can change. So I don't really have any expectations. I try not to put any on that. But if you look at the numbers here, let's go to Thursday's announcements of CPI numbers. You'll notice that they are expecting consumer price index to drop to 3.1. If we looked at some of these price charts, a lot of these commodities over the past 30 days have had a pretty big move to the upside. And let me go through. XLE is one of them. Let's go, I guess XLE, right? Your last 30 days for XLE, actually it's been down. Let me go to the daily here. They added more time frames, so it's screwing me up. Let's forget XLE. Let's go crude oil. Okay, so your last 30 days for crude oil, you're looking at a 16% increase. I think remember, that was 8% of the CPI data, if I remember correctly. I'm pretty sure that was 8% of it. Well, that's one component that's driven this number up here. Let's go look at our softs, right? So these aren't all big components of it, but you can see if we go over the last 30 days, and it's probably like 35 days. So I'm going to go from June 1st. There's my June 1st vertical line. Hold on a second, everybody. I'll put a vertical line there just so we can see from June 1st to, for like 30 days. So we're kind of in the new month right now, but what we're going to get reported is the month of June. Well, orange juice was down. Cotton's down. Corn was down. All right, so this May, you had cattle was up. So futures for cattle were significantly higher. Coffee looks rather mixed. You had some ups and some downs along the way. Hogs or pork, the most consumed meat in the world, that was down. All right, so maybe I'm wrong. Coffee was up and wheat way down. So we have a lot of these soft commodities down significantly in the face of oil rising significantly. So I guess it would boil down to which one has the greatest impact on CPI, and that's above my pay grade. I don't know which one's the winner there on as far as weighting in the index for CPI. But I would look at some of those numbers, and I would think that it might actually be more of a positive impact, meaning it's going to be moving things up. But you'll notice there they're expecting that CPI number year over year to go from 3.3 to 3.1. We've been really just flatlining since July of last year. So it's pretty much been a year of just sideways activity. In July of last year, we were down at 2.9, and now we're back to 3.3. So we really haven't gone anywhere with regards to the CPI number. I didn't check the lumber one. But there's that number tomorrow, which of course is the most important one. That's going to be an hour before the market's open. So this will all be priced in by the time market's open. Earnings-wise, there's nothing tomorrow that's that exciting. It all really starts on Friday. But you see here, we have Delta Airlines, Progressive, you have PepsiCo, ConAgra Brands. That's pretty much it for tomorrow. I don't think any of those are the super movers. Now, of course, we will do a show tomorrow. So I'll have a Thursday show for you, and then I'm going to be gone on Friday, taking off to Las Vegas to go see some music and some shows and some basketball and have some fun. But all in all, what am I looking for? I'm looking for sentiment. My gut tells me we're going to be higher than expectations for CPI. If that does happen, that should be a knee-jerk reaction to the market to drop a little bit. I don't think it'll be 3.1. I think it'll be either 3.2 or 3.3, but who cares, right? It's just about watching when the market opens and see, because all that release will happen before. You get huge volatile swings before that opening hour. As soon as the market opens, then you'll start to get that sense of direction. So I would say probably safer to wait 10, 15 minutes into the trading day before you start buying anything or selling, just to be careful there. Sorry to ask, when are CPI to be released? So they come out 1 hour before the market. So you can go here to Forex Factory and you can see there's 3 different readings of it. You have the core CPI, which takes out food and energy, and that's going to be month over month change. You can see the CPI right here. Actually, I'll click on them. So this is the historical changes in consumer price index when you take out food and energy, month over month change. So the previous month was 0.2%, and that's what they're expecting it to be. Remember, if we were at 0.2%, that equals a 2.4% inflation rate overall, annual. But here's your CPI number. So CPI number, they're expecting to tick up from 0 to 0.1, so just a slight little increase up. I'm pretty sure we're going to see this tick up month over month. And then they give you the third piece, which is year over year. So this is your annualized rate. Okay? And again, those happen, you can see here it says 5:30 a.m. I'm on Pacific. My clock is set to Pacific, so this is going to be 1 hour before the equity markets open. That's when that happens. I'm the opinion, if we do dip, we will turn around and go back up, just my opinion. I think you're probably right. Because what we're met with is every time we have bad news, so let's say that CPI number is higher than expected, right? Inflation's higher than we thought it was going to be. It'll probably have a knee-jerk reaction down like, uh-oh, inflation's here. And then it'll just start to move back up because they're going to say what? Oh, well, the Fed will fix it. The Fed's going to save us, right? I don't know. That, even though that would lead to raising rates, that has not cooled this market at all. Let me see. Let's go look at our FOMC numbers here. And we'll go bring up the countdown just so I can show you when this all started. And we go here. Our next meeting is on July 31st. Right, so let's click on the July 31st calendar tab to see what it looks like. So we'll go here to calendar, click on July 31st. And I just want to show you when this all started. When did we see this really start to, rates jacked up? I'm going to bring the market chart to January of 2022. That's when we had liftoff. You guys can see we went from zero, well, less than 25 basis points, and then it's basically a 25 basis point increase, 50, 50, 50, 50, 50, 25, and we plateaued at 5.5%. But that started in January of 2022. So knowing that, you would think that markets really hit the skids mid-2022 because rates were just getting skyrocketing. Well, let's just go SPY, just because it's quick and easy. And I'll put a vertical line on January of 2022. There is your vertical line. So what's interesting is we had that markets were selling off from January of 2022 all the way through October of 2022. So you had 9-10 months of sell-off. And then even as rates continued to rise, it just went parabolic. Not parabolic, but just went ballistic, went straight up. So let's see, where were we at on October 18th of 2022? There it is. So on October 2022, we were at about 4%. So we've increased, 1.5% from that level, and it's still just trucking to the upside. So very interesting to see how these markets have reacted to these rate increases. I thought we would actually continue to drift lower because these rates kept getting higher and higher and higher. All of a sudden, about face in October of 2022, and just hasn't turned back since. I hope they raise it. It would jolt the markets. I am in the camp, but I don't think they need to raise. I don't think they need to raise. I don't think they need to lower. I think this is where we should stay at for a while. We should stay at 5.5%. This should plateau, in my opinion, just stay there for a long time. Why? Because the market is not performing poorly. Everything is performing pretty darn well. We're seeing a slight increase in unemployment, but other than that, everything's fine. You notice back here in 2006, from June 2006 all the way through August of 2007, we stayed right at 5.25%. So we're basically 25 basis points higher than we were back in 2006. And in that one, we stayed there for quite a long time, and we're almost that same distance and length now. I think the Fed does the right thing. It stays at 5.5. One rate cut possibly just to, again, for political reasons. Other than that, I don't think they'll do anything. Okay. Any last minute questions, things you want me to cover? I got in some of the questions that people had asked me. I have others I still need to get to. I apologize. I just scrambled doing too many dang things over here. Lee says, I started trading UNG, really nice premiums. It is, but it's extremely volatile, Lisa. You got to be careful with that bad boy. Natural gas is moving 2 to 5% a day. I mean, that's a volatile asset. So be careful with that one. There are some great premiums on it, but you got to be careful. And just don't start trading on Boyle. Boyle premiums are even higher, but that thing is that's a chainsaw that'll take your arm off. Naum says, no rate cuts. I don't think Powell would lose his job. I think Powell will probably, if he stays right where he's at, I think he'll be okay. But you never know. All right, that's going to do it for me. We have no guest tomorrow, so I am free to talk about whatever you would like to talk about. If you want something specific covered, let me know. Michael says, what do you think about Pan American Silver? I'm a fan. I've always been a fan of PAS. I don't own it anymore right now, but what do you got? You've got a great looking chart here. It wasn't a pretty aggressive downtrend for the longest time, and Michael, going back to a lot of the comments that I have talked about with you, is you like buying these stocks that look like this, and this is a garbage chart. This looks horrible, But you want to wait for it to break through its most recent highs and establish itself a new uptrend and get past that. And what did it do? All right, as of April of this year, that's the point where like, okay, it's now looking bullish and positive. Now we're challenging highs again. I would expect there to be a little bit of a pullback right now. If not, bullish. Go for it. No, Mark, I'm not. And if you saw me at the event, I'm like, I couldn't be more bullish on Tesla, especially for the long haul. And it's just, I'm waiting for a buying opportunity. I'm just not getting no pullback whatsoever on this rally from 180 all the way up to 270. I mean, this has been a phenomenal run for Tesla, and I'm just stuck on the sidelines. Really a little frustrated with that. We've moved up 43% in 12 days. Shoulda, coulda, woulda. Oh well. Nope, not in there yet. I will be. All right, everybody. Again, if you have something you want me to discuss on tomorrow's show, you can email me. It's on the screen, TraderMerlin@gmail.com. And hopefully we have some good talking points for tomorrow. We got some nice trades on. I have a class in the morning. I might see some of you guys at 4 o'clock today. I'll be doing a digital asset session for Trading Academy, so I might see you at 4 o'clock. So hope you guys have questions. Let me know. Send them in. A quick look at Costco after hours. Did they report today? I didn't have that on my calendar. Did they report today? That would be really stupid of me not to know that. I thought that they... I don't see Costco, so they didn't report, but let's see what they did. It's no big deal. 2%? That's okay. That's not that big of a deal. Let's go 5-minute time frame here. Here's Costco. And let's go extended hours trading. All right, so they shot up, 2.5%. They were up a little bit more than that, but we can find out what that news was. Costco to raise membership fees for the first time in 7 years. Okay. Hey, as long as they don't raise the price of the hot dog, I think that's going to be I hope in 20 years, 30, 50 years, Costco still has that cheap hot dog. That'd be great. Yeah. All right. Membership pricing, great. The good news is I just renewed mine, so hopefully I get a free year out of it. But all right, guys, that's going to do it for me. If you have anything you want me to discuss tomorrow, now's your chance. Send it on in at TraderMerlin@gmail.com, and I'll get those all set up for tomorrow. The sooner you send it in, the more time I have to prepare and build things for you. So send them on in there, and I hope to see you guys tomorrow. Have a fantastic remainder of your day. Cheers. See you tomorrow.